All right. So the session is being recorded, and welcome everybody to this live trading session. I wanted to talk more about why many traders don't actually make money out there. So to talk about this, we are going to be focused more on fear of, greed and fear. That's the number one reason that even if I gave you a very beautiful Kiziah chart like this, many people will not know how to go in or how to come out at what particular point, because you don't know how much you are willing to make or how much you are risking in a trade. That's always the number one reason why there is a problem when people start trading. So to talk about this, it's basically the reason people fail is because everyone out there has been taught something, at least by the 99% of people who always fail in the stock market. So you add to the list of 99% who always fail, you are just bound to fail, because they say the stock market maybe only 1% actually know something. Not that I know something, but what I will introduce to you today is something that if you know, it will help you go a long way trading. So briefly, this is something that they always say, that retail traders normally open trades, but the big boys, the institutions, close those trades. You don't want to be caught up in the midst of opening a trade where big boys are closing. So when you look at this is the Kiziah chart indicator, I have updated this version to actually bring in key areas where you could easily spot the institutions and where you could easily decide that I'm buying here or I'm selling here. So the green zones are called areas of demand, and the red zones are called areas of supply. That is here on Kiziah chart. And basically the settings of the new Kiziah chart, you can show the zones. If you uncheck that, the zones disappear, and then you just trade like any other person. But if you add these, the zones come in. So likely all the green zones you see, those are places where people tend to buy. Like this has been retested, and that is where we are getting this big move going back up. I'll give you the difference. So if I said that I needed this to be a settings of zones period, I want it to be very long, like you see this one. This is a very long zone up to here, and it's based on the strength. So the strength is based on how volatile did the institution sell over there. So you can increase the settings into 5, 6, 7, 8, whatever you want, for you to see clear zones. So because I put 5 here, that's why I got this zone. Probably it started over here, and then we came and retested it, and we go back up again. So it's going to easily let you know where to actually buy or sell, and where to actually take your profits. So that is one way to put it, and I put it to be the length of 85 bars, which means at least 85 of these 1, 2, 3, 4, 5, 6, 7, 8 these candlesticks, 85 of them, when they form, then one zone can be closed. That is one setting. The other setting for it is you can put it that if the price has touched it, then it disappears. So look over here, and you'll see a lot more stuff disappearing in the chart if you put if touched. So if you put it if touched, you see that once the price touches it, things disappear and we start forming new zones. This is more of a cleaner chart for people who actually know how to make estimations, like this. You get your cursor and you look at it over here and you say, oh, maybe when we get here, I need to take off my profits. So, oh, when we get here and we get a green candle, I need to buy. So that is it basically. And with this, again, we have the other set of indicators that I'm also availing out there that actually shows you where to get into these particular trades. That one is called alternative bank. This is the alternative bank indicator, is also what forms the robot. So it's just that, and I like to just hide that stop loss zone and just hide that profit target zone, and then I add it over here. This is what brings me onto the chart. It shows me the buys and sells on my Kiziah chart. So for example, you see how accurate they are on the areas of buying and selling. But these zones, you must know that right now we are headed up there. If we ever form a red Kiziah candle and you see a sell signal, that's a good place for you to sell. So let me just introduce you onto the concept of demand and supply and why it's very important. I think the overview is you just need to know where institutions are selling or where they are buying, so you also sell with them and also you make money with them. I will go on unmuting guys who just showed up here. I have a couple of guys that need to be unmuted so we can have a conversation about the stock market, free and fair. And also those who do not understand English, I'm still learning some languages. And thank you for coming always, even though my English might be not acceptable to everybody, but thank you for coming. We are all the same. So introducing the concept of demand and supply. You know, the reason that what I'm teaching you today is like the God of profit making. You know why market moves the way it moves. Many people don't know, but actually markets move because institutions and big players like those who made a buy all around this area are moving the market. So if you know where these people are, you can actually make a lot of profit in trading in the stock market. So this brings us to the concept of demand and supply. And I will just give an overview by using what everybody knows, and then I'll illustrate one more time why people fail out there. So I will use, like, here I have a lot of people from different countries, and everyone in any country here, you all know chicken at least. I will use that as an example. So to introduce the concept of demand and supply so that you understand it in your basic, home ground language is this. Many people, would you rather buy chicken today because you buy chicken at 10 a.m. because you have been told that people bought a lot of chicken at 8 a.m. That is very different. You understand what I'm saying? Would you rather buy chicken at 10 a.m. because you have been told that people bought a lot of chicken at 8 a.m.? To me, that doesn't make sense, but that is how everybody else trades. They are trading on that past volume, which I always tell you over here. The normal volume that people trade on is this, and it's a volume at a particular time. This volume over here, this is the number one reason why everybody fails in the stock market. I'll need to increase my chart just a little bit so we have it all showing there. But if that one's still not showing, let me show you I'll just do a quick drawing on paint. Excuse me. So you don't buy chicken because you have been told that people are buying chicken at 8 a.m. but you wake up at 9, so you run to go and buy chicken at 10 a.m. because many people bought chicken at 8 a.m. That is what most traders do. They go to sleep, they wake up in the morning, and their neighbor tells them, hey, people bought chicken at 6 a.m. and they all run to buy chicken. They don't know why people bought chicken at 6 a.m. They don't even know at what price the chicken was bought at 6 a.m. And that's why people fail. When you use those volumes that are normally down here, that's the number one reason why you fail. That volume only shows you how people traded a lot at a particular time, but it doesn't really show you the price level. So when you use the concept of demand and supply, it's basically going to show you particular zones. I'm trying to draw it here. It's just blinking an eye for me. There you go. I found it, guys. I brought it. Can you see it? Can you see my screen now? The one that I just popped up there. There. The white screen. Yeah, I'll keep unmuting people here as they come. So you look at my white screen over here right now. The concept where people are taught how to trade in the stock market is this. This is normally how the price is. I'm trying to draw like that. So I will say this is time. This is time. This is maybe, let's say 7. This is 8. I don't know how to write 9. Let's just do something. This is 10. And this is 11. And this is 12. Good. So what happens here is that you look at the price over here of chicken at around this place, maybe it's $10, then over here it's $20, over here it's 30, over here it's 40, over here the price is $50. All these are dollars. So this is the price of chicken when we make it like this. This is the price of chicken. We'll call it chicken. So when the normal thing that people normally use is this volume down here that shows like this, you know them, the volumes that I talk about, that everybody out there tells you, oh, I saw a spike in volume at 8 a.m. I saw a spike in volume last night, stuff like that. You know the volume I'm talking about. So would you rather buy chicken at 8 in the morning over here? Would you rather buy chicken? Would you rather buy chicken down here? Because you were told that a lot of people bought chicken at 8:30 over here. Or would you rather buy chicken at about $30? You understand? Over here, $30. And because you have been told a lot of people bought chicken at $30. What makes sense is buy chicken at $30 because a lot of people bought chicken at $30. Don't buy chicken at 10 a.m. because you have been told people bought chicken at 8:30 in the morning. So this brings me to the concept of demand and supply. It happens like this. So why did a lot of people decide to buy the chicken at $30, not 40, not 50 or something like that, not 20, and something like, not 25. There is also this likelihood that people bought a lot of chicken over here at 30. So if you already know that people bought a lot of chicken here at 30, and your price already, when you woke up at 10 maybe, the price was trading up here. All you need to wait for is for the price of chicken to fall back again and get to this level where we had like maybe let's say 1,000 people buying chicken at that point. You understand how the concept of demand and supply works? Because once the price goes above and then it comes back, I don't know, my cursor just keeps getting lost in here. Once the price goes above and it comes back, it's going to test this zone where people bought a lot of chicken at $30. This is an area of demand. So once we test the area of demand, when we form the first green Kiziah candle like this, the very first Kiziah candle that is green, above this zone, you only go and buy, make your buy entry over there because you're buying at the area of demand. You understand? So the price will keep going up with you like that, and that's how you profit. So the essence is we have two types of volume. This is volume at the horizontal area, and this other one, this volume over here is what we need. This one is what we need. This is volume based on price. You see 1,000 people buying chicken at $30 versus this other volume down here. This other volume that we have down here, this is not what we need. This volume that everybody in the stock market is told, oh, I saw a spike of volume at 6 a.m. It doesn't matter whether 1 million people bought chicken at 9 a.m. and you woke up at 12. So you just want to jump without knowing how you're buying your chicken or where you're waiting for it. This is not the volume we need. So the concept of demand and supply works like this. You just need to know where the big boys are buying their chicken or where the big boys are selling their chicken. And the same concept applies. I'll just draw just a little graph over here again. When we are selling, it's the same. Just estimate the same thing I told you about the price of chicken and everything. So let's say the chicken was $50 over here. And then the price of chicken starts falling down, and then we get to a level, around $40. Let's say around $40 here. There was like a very huge volume going on here at $40. So at $40, there was huge volume going on there. People bought over here. A lot of people bought over here. Tentatively, this is an area of demand, but the price of chicken goes below this area. Wait for it to come and test this, because at $40, maybe we had, like, let's say 1,000 people who are buying the same chicken. So if actually the price goes below the 1,000 people, wait for it to come back and retest this zone. Once it tests what the 1,000 people did, and then it fails, wait for the first red Kiziah candle to close below this zone. Once the first Kiziah candle closes below this zone, make your entry, make your profit going down. This turns into an area of supply now. It becomes like, this is where big boys are really selling the thing. So the point is, all you need to know in this stock market are only two things. You just need to know the area of demand and supply. So that is what Kiziah chart has right now. I have indicated it on the Kiziah chart so that we are now able to see, areas of demand and supply, and we are able to see areas of areas where price is working out. So when you see a green one like this, it's a potential area for you to buy. When you see a red one like this, when you see a red one like this area, it's a potential area for you to sell. You understand how the concept of demand and supply works. And the point is, sometimes price will always break these things. It's not always, if stock market was that easy, everybody will be a billionaire. Sometimes the price will just go straight out, just past these things. Or sometimes the price will just, pass this thing without even testing anything. Very impatient traders are likely to jump in and ride that. You will be lucky sometimes you will not be lucky. So the basic concept that I'm teaching today is this, the concept of demand and supply. And I'm telling you that it's more important to buy chicken at $30 because 1,000 people bought chicken. Right now in America, prices of eggs are still not going up, but we are losing the amount of eggs we used to have in Walmart and all the shops. People are buying a lot of eggs right now because there is an estimation that recession is coming, and the only food that most Americans know they can easily cook at home is an egg. So the price of egg is going to skyrocket very soon, and also people are starting to buy eggs and keep in their freezers, fridges and stuff like that. People are buying a lot more eggs like that. So you would rather buy eggs now, because people are buying eggs hoping there is a recession and they can always eat eggs, than trying to buy egg because Kiziah told you people are buying eggs, but you don't know at what price they are buying eggs. People are buying eggs now at maybe $18 for, a dozen of eggs. So very soon, the price of eggs will be $24 a dozen. It will come to $30 a dozen. But if you bought it when Kiziah told you that, hey, big boys are buying eggs right now at $18 a dozen, you are good enough. So this is the concept of demand and supply. At every price, there is either interest to buy or sell. And knowing what's happening around that particular level is like the god of profits. All you need to know is Kiziah chart shows you the moves, and then I show you even what people are doing at particular areas. So you just need to know that at 40, at 50, at 60, at 70, there are a lot of interests over there. So what do? When the big boys come to try and sell the market, I sell with them. They have huge capital and they always protect their positions. So if you sell at the time Bank of America is selling, Russell 2000, they are definitely selling huge number of contracts. You're likely to benefit when you sell alongside Bank of America, or when you buy crude oil alongside American Airlines or Qatar Airways. You're likely to benefit more than you're likely to benefit when you make a decision by yourself and say, hey, I'm buying some gas today by myself. It won't benefit you. So you are always lucky to use Kiziah chart to identify areas of demand and supply and do what the big boys do. Yes, they make $1 million, but it is not wrong for you as a retail trader to make $1,000. That is how you grow. That is how you grow. So that is it. And then you can trade with the big boys. These are the institutions. And you can also, through a task platform, it's a very, very good platform. Another reason people fail out there, including myself, I failed so many times in the stock market because I did not have the right platform. And I kept hearing, looking around, and people say, oh, this one, oh, this one, oh, this one. Everybody is trading on the wrong platforms in the world. I am sorry to say that, but that's the truth. The day you come to ATAS and migrate from your initial platform, you will see that ATAS, these guys, they mean business. They say they enable traders to see more, so you earn more. And that is the truth. I have earned more money playing the stock market on ATAS market than I have made any money anywhere else. So now, yeah, I'm seeing I'm being requested to show my chart. I'll just minimize this and then I'll show my chart as we go. The chart is back. So just finalizing on this, if you go on YouTube and try looking over, search for ATAS, find the founders of ATAS when they are making their presentation in seminars, world seminars. Look at those boys, the way they do their presentations. Those are not lucky boys who are born rich. Those are real people who worked hard to develop something that is meant for traders. ATAS is very different from other platforms out there that people say is made by, I don't know, by traders for traders. Those are writings. Those people are not developers. Those are not software developers. Those are big institutions that want to create something that you can pay a fee for. They are not out to help you. ATAS is out to help you, and that's why you can see Kiziah Chart having every little thing you want. I am somebody who developed my things from scratch on ATAS, and most of these platforms don't have whatever I used to develop my stuff. So then you just need to, let's wind it up. You just need to know where the big boys are situated, and then you buy along them or you sell along them. And if that is very clear, it's just easy. Wait for the big boys or the price to come and retest where the big boys are, and then you copy the big boys' moves, and that's how you profit from it. So up to there, I think I'm done with whatever I wanted to talk about today. At least it's been 30 minutes. I hope it's been fruitful to somebody who is new to trading and just starting. And if you have any questions about Kiziah Chart, let me know right now. I will be taking the comments, and thank you very much. I'll go, like, I have a lot of guys over here listening, so I'll just go by the names according to how I see them. I see Pavel. Pavel, do you have anything you need me to clarify to you?
Hi, I don't have any questions.
All right, cool. I see Vivian. Vivian, anything you want me to clarify to you? Okay. Vivian cannot hear me or not talking. Let me go to Pietro. Pietro, anything? Oh, Vivian is speaking. Yeah, Vivian.
Everything is good. Thank you.
All right. We'll talk, Vivian. I'll try catch up with you today when I'm done with the live session. I go to Pietro. Pietro, anything?
Good morning to everybody, and you, Philbert. I lost the first part of your presentation, but the demand of support is something that I already assumed in my trading, and this is one of the ways to follow to have success in the trade. So just only asking to you a copy of this this video, just to follow since the beginning of the video of the streaming.
All right, I'm going to send you a copy of this once we are done, and then it will be available to you, and also I'm going to post it to YouTube.
Something strange is occurring between your chart and my chart. Mm-hmm. My chart is set on the Russell 1000, and mm-hmm. the range US is 0.52021. Mm-hmm. But just now has mm-hmm. finished a retracement, a short mm-hmm. retracement. Mm-hmm. Meanwhile, you have a continuous uptrend over the candles.
Yeah,
this is strange for me. Maybe I missed something in the at the beginning that I cannot now understand or follow.
No. It is okay. You're asking. Other people also asked me the same. It depends because we are all Russell 2000 is Chicago Mercantile Exchange. Maybe I am closer to the US, Chicago, and basically it's about market data. Who is your data feed provider? Because I am using Rhythmic, and I'm using Rhythmic through AMP Futures, which is my live account. So I don't know what you're using. Maybe you're using Rhythmic through Apex or UProfit or something. That is what creates that small thing you see.
It's rhythmic.
It's Rhythmic, and so the company where you're getting your data feed from is also either having delayed data or something. And also, this is part of the reasons, not to quote anybody or mention something. Most traders who try to pass evaluation actually do not make it to the end, because I do think that some companies interfere with market data. So you end up seeing something, you think it's time to sell, while actually the price is going up. So you sell and you keep making losses on your live account. That thing has been done to me. It's been done to my students before. And I know companies that do stuff like that. But I don't know where your live market data is from. Sometimes it's mine because I'm streaming. So I will refresh my chart so we confirm if the error comes from my side or it's your side. Let me refresh the chart and see. And tell me if it looks the same as yours. Mine still comes back to this. What about yours? Can you refresh yours and see if we look the same?
I made the refresh, and now is rising the prices. And
it's rising.
Yeah, are trying to earn for the challenge.
Yeah, I think it's something basically about delayed market data. I'll try also to talk to you on the side after this about how to get proper market data. But I recommend that many people don't know this, but it's expensive. That's what people think. But if you have $100 and you open an account at AMP Futures, they need you to just maintain $100 a month. But they take data fee of $30. It's much cheaper than anyone out there charging you $105, $150 for market data. So open an account at AMP Futures so you get live market data. As you do your evaluation and everything, you place your trades based on actual live market data that institutions use out there. AMP Futures has it, Philip Capital has it, and all the rest have it. So we'll talk about market data and the variance that we see over here. Meanwhile, I'll go to anyone else who wants to speak here. Okay, let me see. Claudio. Anything, Claudio?
Me too, like Pietro, I lose the first part of your presentation, and maybe you can send me or can see in the Telegram.
Okay, I'll send that to everybody after this. Henry, anything to say?
Yeah, I mean, you
Oh no, Claudio. Yeah, Claudio, go on. Go on.
Mm-hmm. Okay. Say I don't know which platform you use because I cannot see range West. Can you say me which platform you use, please?
Platform I use for trading?
Yes.
I use a TAS platform. I'll send it to you on your thing on your Telegram. I'm on a TAS.
Okay.
And also my broker is AMP Futures, so I'll send that to you also.
Okay, thanks.
Mm-hmm. Anyone else here? Henry, anything to say?
This is I lose the first time. This is a robot for like this operation, or you do yourself?
No, I have a robot for this operation. It's called Bank Algo. That's the robot that I have for this operation. And for you to understand how the robot works, you need to understand the concept of demand and supply. So the robot works in your favor, not against you. because when you see sell or buy, the robot will put you in the trade, and it trails stops and it trails profits also, you know. So the robot is good. I will be availing the robot. There are a few guys who have already bought the robot from me, and they have it already. And the robot is on the website. It goes for $999 a month. And that is a fair price, because if you come to check on the robot, it's something that can actually generate to you almost like, you know, $3,000 minimum a day when you're trading Russell 2000 or NASDAQ 100. So it might look expensive, but nobody gives financial freedom by paying $20 or $30. So it's a good robot. We'll talk about it when you need it. We'll talk about it, but it follows exactly these signals, and it's over here. This bank algo.
Bank algo,
yes. So this is the robot, and my robot, I have option. You can say buy and sell, so it will pick all buys and sells. When the signal comes as sell, it sells. When the signal comes at buy, it buys. But at the same time, you can say buy only, or you can say sells only, depending on the trend of the day. And then this is the order volume, which is how many contracts you want to trade, like one contract. This is a break even price that I put here. So this was for NASDAQ 100 on the range 0.3045. So on Russell 2000, I like to put this trailing to be 6. I put it at 6, and then I check this trailing here. And then the mode of stop loss here, I have current. Current is calculated as the most closest area with high volume, where if the price goes about, you know, goes against it, you say, well, it's past the highest volume since I got the signal, so well, I might just take a loss there. And then I have the one for the week, which the week means it puts them up here on the tops or the bottoms, the swing lows and swing highs. And then you can change the colors of your buy and sell signals on the robot. And within the same robot over here, that's checking visibility to see the buy sell signals. And then there is a label transparency. Then there is a stop loss. Stop loss minimum ticks is like the minimum that you must have a stop loss for the robot to work if you're putting that. And then there is a length of stop loss, which is blue, and then the stop loss width, which is that, and then the TP size. This is the take profit size. This is the risk to reward ratio. So if you see this is written 2, it means your risk to reward is 1 to 2. If this is written 3, if you change this to 3, your risk to reward is 1 to 3. You change it to 4, your risk to reward is 1 to 5. I can hear some echo. I don't know what's happening there. And then that is how the robot works. And then this is it. So basically, you can add the robot on the chart. So once I add the robot on the chart, I'm going to show you the pink things written TP. Those are areas where you take your profit, and the blue is where you put your stop loss. So for example, if I said, just watch my chart over here, you see where the stop loss is placed right now. That stop loss is based on trend here. So if I switch my stop loss to go to the week, that's the stop loss. You see where it goes? It switches back up there. So when you get into this sell trade, it automatically calculates for you this from this distance to your entry and makes this as your profit target. But the profit target down here, as you see, is set to risk to reward of 1 to 2. I do not take that kind of a gamble. That's 1 to 4 actually. I don't take that kind of a gamble. I just like my stop loss over here. Do you understand? I take a risk of 1 to 1. Most of the times, that is big enough for Russell 2000. This risk of 1 to 1 is always playing 3 contracts, gives me about $225. Always, every time on that. So you try to make this stop loss to come back to that, you know, we could be missing it just a little bit. But if you make it like that, you're already hitting that. Almost all of them, you hit it and it goes. You hit it and it goes. So the point of trading the stock market is to know how much you want to make. And if you know how much you want to make, and you actually guarantee yourself $150 or $100 or $30, whatever it is, repeat that same process over and over, over and over. And then that's how you become very good in trading. So about the length of stop loss, when I reduce that, you see it reduces because sometimes it makes your chart really clustered. And the same as profit target, I reduce it like that. And even if you make it to 0 like this, it will disappear from your chart. But when it disappears from your chart, it doesn't mean that the robot won't pick it. This is pre-programmed in the robot. So the robot will just take what's already in there. Even though you don't see it, the robot will work with it like that. So even this stop loss, you know, you can still say you don't want to see it. Even you don't want to see, you know, the sell, whatever those ones, you can still say that you don't want to see them. And that is basically the robot works perfectly well, and it trails stops. So I'll be talking more about the robot. Any questions? All right, Henry, if you have anything to say, you can say, and then feel free to leave. Everybody who has, you know, you want to leave, feel free to leave.
Yeah, I just wanted to, you know, for the demand and supply, where would you anticipate about the, you know, the stop loss if you're not using the robot or the, you know?
Yeah, for the demand and supply, you see, like let's say this was our trade, we were getting into it, this one over here, or this one. This you got into a sell over there. I put my stop loss behind this. You see this demand, whatever cost me to sell, that's where I put my stop loss above.
Okay.
If I am going to find a signal here to buy, I will put my stop loss down here. When it goes below that, it's actually going to keep going when your stop loss is hit. So that is why Russell 2000 on the range of 0.521 is economical. You won't lose a lot of money as you would when you're trading NASDAQ or those volatile instruments. So I put my stop losses behind here. I put them behind there. I put them behind there. What really matters right now is you need to know the trend. Once you know what trend we are trading in, then you're lucky to buy than trying to make money selling this one. Unless we had an initial area of supply around this zone looking from the previous day or something like that, you know, that's too far away. And sometimes you will notice stuff like this. It's big, not touched yet. It keeps growing. You're lucky to keep selling, you know, than trying to buy. So basically, that is the concept of demand and supply. And then you see here we have very few of them, like it's touching that and that and that. To adjust this to get just the proper ones, you come to Kiziah Chart.
Yeah.
And then once you come to Kiziah Chart here, the strength of the demand and supply is determined by, look at this buy signal over here. It has gone like maybe, I don't know how many bars, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's a lot. So that is the strength over here. Now it only counts 5 bars. But if you keep moving it to, you see some disappearing, and then you only left with the 10 zones. You see, like when we left with the strength, it means if it touches this zone in the future, that is a strong area. You understand? It touches this zone in the future, that's a strong area. You can see we have omitted this zone, which is more of a consolidation where we will be trying to trade and making nothing. But over here it goes, and this is our area of 10. When it bounces off, you see it goes back up. Then it comes over here, it tries to go, but it fails. Also, we have this concept of let it go up, and then when it fails and breaks below that zone, you know it's going to keep riding down. So you can strengthen your areas of supply and demand by increasing the strength. Increasing the strength here. This is the strength. You make it 10, you make it 12, you know, they keep disappearing. You only have the strongest area you're looking at. At some point, you know, it could just let you have maybe even 20. Even if you let it 20 over there, you will still find something, but not as frequently as we were finding them before. You see?
Yeah.
So that's the strength, but you don't want to be the one waiting for those 20 zones. But if you are that smart trader who is very patient, you see how we chop back onto that area of 20.
Yeah.
And then it just keeps going back. You make more money like that. You wait for this one also right there. If it fails, you put your stop back there and you say, I'm in a sell mode. And then, you know, that one came and took you out almost towards the end of the market. So you must know how much you're willing to lose versus how much you're willing to risk. And I don't really play with getting a strong area of 20 like that. But the good thing is you can play those areas and add another Kiziah chart, like for example, I will come here and make these zones, you know, it's 20. I will just make this color, let's say, what color can I give it? I will make it like that. You see the color changing there? And then I will make this other one, maybe let me make this other one, this color like that. You see the color changing. So I know that when those colors come like that, those are areas of 20. You understand? But at the same time, I can come back here and add another Kiziah chart. When I add another Kiziah chart over there, I just come over here and I put show zones. And when I show my zones, it's now 5, and it's going to have my red and green only. So when you add that over there like that, you see that. So I have more of Kiziah chart, but you need to increase the brightness. For example, for you to see, you remember the zones of our 20s that we had. You have to increase the brightness so that the 20s can overpower for you the, what do you call them? Can overpower the transparency was 2. So keep watching to see where we are going to see. Do you see the color changing over here? And you see the color changing over here on the 20. So it can have different colors like that. It's a mix of colors, and the transparency at 10. So wherever you see this, you know, oh, this is the area where we had 20s. Oh, this is the where we had 20s. But any other green, the normal red, that's just the normal part of, you know, the 5 ticks or the 10 ticks. You can do that also with, you know, Kiziah chart like that. So yeah, any question again? Well, Vicky, okay, go Pietro, yes.
Very nice and powerful, the robot.
Oh yes, the robot is very good. It works. You just need to be very patient with it. And I come from Kenya. For those who do not know, I come from Kenya, and I look at it like back in my village, to pay rent, I need $50 a month. My robot can actually give you a minimum of $75 per trade. That means every single day, if I was living in Kenya, I am able to pay my rent and have a profit of $25 extra. So nothing is too small. It just depends on how you want to grow what you already know how to make. And that's the policy of trading. And any other person, Mike, anything today?
One question, sorry. Can you use with also other value like I don't know, the forex or only in the range USC?
You can use it on others like in terms of trading Russell 2000, Dow Jones, and this, or what do you mean? Trading forex, euro pair, or things like that?
Yeah, yes. I ask if you can use also for in other type of market or
yes.
Yeah.
You can use it on any type of market, including forex, including stock market, anything. You can use it on anything. You just need to have connection of data feed for you to trade the options, or for you to trade the forex, or for you just need the data feed. I know at TAS they actually give data feed for the US stock markets, and at TAS they don't do forex. So very soon, within the end of this year somewhere, we'll have Kiziah chart available on TradingView and other platforms that allow people to trade forex. But for now, my priority is to grow with a TAS platform, because this is where I have grown all my trades and my skills. So I won't really be shaky to try move around and get something out there, while I know if you use it in here, you're likely to make 20 times the profit you will make if you go using it elsewhere. But it will be available in the future for everyone else.
Great. Thanks.
All right. Anybody before we wind it up? All right. Since there is nobody, I know I have a few guys to make phone calls to, and then we'll talk. So feel free to leave. It's about 6 minutes to 10:30, which is still fine. So those who want to trade, keep trading. Kiziah Chart is available. A couple of guys will be expiring pretty soon from the deal they got from Atas. It's coming to an end about the 22nd of January onwards. They will keep expiring like that. So once they expire, you'll need to make a payment to upgrade to the latest Kiziah Chart version, and then it will be for now $100 for anyone. But next month the price will be increasing. I can't say to how much, but I sure know for the value addition that I give and for the profits you will make, $150 is not too bad for someone to ask you for a month if they can really show you how to make 1,000 in one day. So get it early before the prices keep going up and up. And thank you very much. The robot is also available, and my signals here also are available right now for $150. So moderately, that is where you get financial freedom. And thank you so much, everyone, for coming. Bye. Feel free to leave, guys.
Thank you, Philbert.
All right. Thank you. Bye.
Bye. Thanks.